Hey guys, welcome back to the channel. Today we're going to do something a little different. Profile a systematic trader. Now, Jack Swagger says that he has not come across many systematic profitable traders in his Unknown Market Wizards book. Got it here on the Kindle. This guy is Marsten Parker. He initially wanted to be a violin player. He wasn't really good enough, so he started working at a software store and did some programming on the side, met some guy at a party, got an interview, became a software guy, and that stock initially IPO'd and went up to the moon and whatever, and so that got him interested in stocks. And he found out about the breakout, buying stocks to new highs, kind of the Investor's Business Daily strategy, breakouts and high volume and everything. And he wanted to backtest the strategy because he had that kind of a computer programming mind. And I like this idea of backtesting. Find something that does it really work or not. I think it's important to find that out. Now, the strange thing about backtesting is for some reason it apparently doesn't work as well going forward as it does when you look back through your systems. I don't really understand this idea of the problems of data mining and the problems of over-optimization. I'm trying to learn about it, but he says that really when you find a system, it may work 50 to 100% back-tested, then going forward, it may only work 20%. Now this guy, Marsten, does have a 20-year plus track record of plus 20% returns annually a year. So he's got great returns, just not quite as crazy as some of the other traders in this book. So he started back-testing the system. He found out that the intraday stops were actually a problem. So he kept stops for this trend following system, but he only did those if they closed at a certain level. So that was an improvement he made. Then he also found an interesting short strategy where if a stock declined 20% or more, then the next day would be another declining day. So he had two systems kind of going on at once, the trend following and then the short system. They would hedge each other out, and this worked quite well. Now, he did have to tweak some things. The high frequency traders and everything started coming in around 2005, even more, and he found out that he had to change the timing on his mean reversion system. Let me read this so I'll let you know exactly what he had to change. He had been entering trades on opening of the following day, and he changed it to run 20 minutes before, trigger the trade 20 minutes before close. So he was entering on the same day rather than entering on that following day, and that made a huge difference. He said that he had his best 24-month stretch after he made that change, and the other way continued losing, and it never recovered. So you can see just a small change can make a big difference. Now, he continued on with this trend following strategy and this mean reversion strategy, not mean reversion, short selling and trend following up until about 2013 when we had the buy the dip mentality come up. And so his trades that were triggering short or stop losses actually became buys in the market. People, we were in this more of a bull market, the market, buy the dip, you've all heard that. And so he started more with the mean reversion. Now the mean reversion strategy, you look for something that's in an uptrend, it's down a certain percentage in a given time frame, you're initially going to show some losses because you can't time it perfectly. So there's not a traditional stop loss. There's a 5-day time stop loss. It takes about 10% in each position, and that worked really well for him. He got hit pretty hard in 2015 because he was trading too many biotechs, too many Chinese ADRs. I guess he didn't really look at fundamentals per se, so he probably didn't really think, okay, these could be riskier areas. But in any case, he tweaked it. He went more to IPOs. IPOs seem to hold well with the mean reversion strategy. So I believe he's doing something, he's not giving away his full strategy in this book, but he's doing something along those lines, mean reversion IPOs to this day. And, he has some guidelines about when he changes the system. He may, if a system is not over the 200-day moving average, he may put it on the shelf, different things like that. And, it's tough to know whether your system is truly broken or whether it's just in a drawdown. And that's something, I can't really give y'all any great insight as as to that, but that's something to watch for. I'm starting to use TrendSpider myself. I'm trying to learn a little bit about backtesting. I think it's very underused in the market. Everybody can read a chart, and yeah, I'm sure there's a lot of smart people that are backtesting, but why not kind of add that in with the early information that we do in the Dumb Money Chris Camello strategy? Seems like it's worth at least considering. So anyway, guys, we will profile another one of these traders. If you have any thoughts on backtesting, let me know down in the comments, and I will see you guys next time.